Ladies and gentlemen, people of the internet, welcome back to yet another episode of Crypto Over Coffee. I hope you're doing well today, and if you're new here, every Saturday we break down the latest news and the hottest topics in the world of technology and cryptocurrency over a cup of delicious coffee, which today is by my friends at Onyx Coffee Roasters. That being said, in today's episode, I'm talking about Bitcoin's recent surge and what it could take for BTC and the rest of the crypto markets to run higher, Cardano ADA's 60% gain, our usual 404 logic not found segment, and more, so make sure you stick around for all the updates we've got in store for the show today. Now, if you like crypto, please do subscribe to the channel, hit the bell notification button, or follow the podcast on your platform of choice so you can get a heads up whenever I post new episodes of Crypto Over Coffee. And better yet, if you are a subscriber and you leave a comment on the YouTube video on the show every week, you will be automatically entered to win a rolling random draw for a Keystone Pro hardware wallet each week. Now finally, just a friendly reminder, please be aware of scammers across all social media. They're pretending to be me. They're asking you for money, for personal information, to contact them to discuss whatever random stuff they have to talk about. I will not reach out to you. I will not ask you for money. I will not ask you for personal information. So if you get a comment on YouTube that asks you to contact me on WhatsApp or Telegram, or you get a random email, please report it and be safe. Now, as you read in the headline, Bitcoin's recent surge back to the $40,000 mark has been a sight for sore eyes, with macroeconomic conditions, regulatory fears, and global conflict pushing the price of Bitcoin down for most of the whole first quarter of 2022. But at the top of everyone's mind are a handful of grand questions. Will this last? Will we sell off again at the 44K mark like we have several times this year? And what will it take for Bitcoin to not only hold on to these gains back into the mid 40Ks, but to add to those back above 50K or higher? So let's break down some of these things. First of all, I want to point to some of the reasons for Bitcoin's recent resurgence. One major element of that is the all too common phenomenon that we like to refer to as sell the rumor, buy the news, or really expectations versus reality. And it's actually in reverse. It's buy the rumor, sell the news. But there's so much fear emanating from the crypto markets in relation to the idea of the Federal Reserve hiking interest rates, compounded by the looming Biden executive order that had markets in a bad way. However, both a modest rate hike in March and the executive order came to pass, and here we are in a better place than we were before those two fear-inducing events. So to me, it's a case of the markets having priced in the worst-case scenario out of speculation long before these events ever materialized. And as such, the actual events themselves did not have a horrible effect on the market at all. The overall positive outcome from the Biden executive order on crypto and the rather meager rate hike seemingly lifted some of the reticence people had in buying Bitcoin and crypto in the weeks leading up to these precipitous events. And some of, but not all, the on-chain metrics also speak to the price appreciation that Bitcoin has seen lately, with the supply of Bitcoin on the market remaining rather constrained and coins continuing to flow off exchanges and into cold storage wallets, as well as hash rate pressing higher and higher as miners continue to grow and Bitcoin's proof of work difficulty following suit. Another area that I want to point to here, though, is Terra, the Cosmos ecosystem network whose native cryptocurrency Luna is in part utilized to collateralize stablecoins like UST. And Terra has laid out plans to purchase billions of dollars worth of Bitcoin to bolster reserve assets for that protocol around stablecoin issuance. And this is definitely having an effect, and it's a perfect seg into what we need to keep this Bitcoin price appreciation going. Rumor has it that Terra is readying another $125 million Bitcoin purchase, which is no small event given the limited Bitcoin in supply to be purchased at any given time. Furthermore, mining difficulty and hash rate have been growing like crazy, which has traditionally sent prices moving up as the cost of mining Bitcoin and issuing new Bitcoin towards the fixed cap has grown. What fuels big price runs is whales and other big buyers, plus a little bit of retail FOMO, mixed in with a little sprinkle of bare supply on hand. Not a lot of supply on hand. It's laws of supply and demand. Now, Terra buying hundreds of millions or billions of Bitcoin is definitely whale activity, but it's going to take more than just that to bring us towards all-time highs or sustain a run past 50K. You need a catalyst event to really kick things into high gear. Something like a spot ETF for Bitcoin would do it, or huge institutional interest. And there could be a path to the former, according to Bloomberg analysts who speculate that regulation of crypto exchanges would clear the last major hurdle, for a spot ETF to be approved by the SEC. I won't hold my breath, but that would be huge, and that would be a huge catalyst event. Now, the fear of punitive regulation stifling innovation and macroeconomic forces like interest rate hikes can take what looks like conditions for a nice move up into a big old rejection, which means that the whole regulatory picture here must not turn any bleaker for us to move higher. And there's also evidence here that that could also come to fruition. I mean, some of the most vocal critics of crypto, like Treasury Secretary Janet Yellen, for example, have seemed to soften their approach and opinion towards this space, which signals at least some positive movement from those at the very tip of the spear when it comes to rulemaking in this space. Which brings me to the ever-important counterpoint to the pretty picture of the best-case scenario that I've painted, where Bitcoin goes up, macroeconomic conditions cooperate, regulatory cooperates. Here's the counterpart. There are always things that can go wrong. And first things first, there have been several setups just like this one, where we surge to $44,000 Bitcoin, everyone's euphoric, and then the rug gets pulled out from under the market for whatever reason. So we need to push past this coveted 45K mark if the analyst community is to be believed, which is up to you to decide whether you put stock in these types of, price thresholds. But one area of concern for me is the fact that Russia has now signaled that it will accept Bitcoin for oil purchases, which I can tell you, the countries who have imposed energy purchasing sanctions on Russia will not be very pleased about. However unlikely it is, if Russia were to be able to sell any meaningful amount of oil for Bitcoin, that could spell trouble in the form of knee-jerk regulatory and legal response. I've seen people celebrating this online in crypto, this whole news, and I really don't understand why. The potential bad news here is pretty big. We don't need another Bitcoin is for bad guys debate on our hands. Now, secondly, though, I worry about whales putting a damper on the party here as well. Because all it takes is a whale or two to trim positions to take the steam out of a move upwards. And if rate hikes begin to come more aggressively, that could very well happen. Now, only time will tell us what happens next. These are not necessarily predictions, but speculations or scenario speculations. And I'm weighing these right now, but I'll leave it to you. Are we going higher past the sticky $44,000 mark, or are we headed back down for yet another run-in in the 30Ks? Now, Bitcoin has done well in the markets of late, and that's no secret. We just talked about it. But another fan-favorite cryptocurrency out there has seen a 60+% gain in the month of March in a return to form after a very rough start to the year. And that is Cardano ADA. Now, I presume about half of you watching are rolling your eyes right now, and the other half are beyond stoked that Cardano ADA is coming up at all in the video, because it's one of the most polarizing projects in the entire space. Frankly, I like it as a technology guy, as a research-minded guy, so I cover it on the show. It's really that simple. Cardano has rebounded back above $1 on the back of progressive maturity and adoption of dApps on the network, and a rich set of assets live on mainnet today. Some of the expectations versus reality after mainnet launch of smart contracts has started to resolve, and many are wondering whether this move will slow down or reverse, or if ADA is going to continue back towards $2. Now, here's what I think could push momentum towards $2 instead of down. First, Hydra, the layer 2 scaling solution at the heart of Cardano's repertoire to scale transactional load on the network, has made a lot of progress. Recently, Hydra was tested with a live connection to the Cardano testnet for the very first time, with progress seeming to be ahead of schedule, dare I say, for Hydra as it stands today based on some of the milestones I've been seeing them hit. And that's good news, and I can only speculate that Hydra's core devs are pushing hard to get this out into the world in mainnet in short order. Of course, protocol updates like this create a lot of hype and excitement, and that drives price. We've seen it many times before. However, there are more sustainable sources of growth to be had, which can be found in projects like Liqwid Finance and JED, for example, which are huge composable building blocks for DeFi on Cardano that have not yet made their full landing on the network. As you know, liquidity and debt drive everything. They drive economies. So stable coins like JED and Liqwid Finance's lending protocols will fill a major niche, dare I say a gap in Cardano, and drive lots of growth for DeFi on the network, in my opinion. When Liqwid Finance lands on mainnet, I think there will be a market impact that can be seen on a macro scale as it gets a foothold in the DeFi ecosystem on Cardano. Give it a couple months, I think you see the difference. There's a lot to look forward to that's been in the works for a while on Cardano. Not everything that we've been talking about for the last several years has come to fruition yet. And I mean, the fact that Grayscale added Cardano ADA in a large percentage allocation on their smart contract platform diversified fund clearly indicates that some big players also view Cardano as a legitimate contender and very much not dead. And I'd agree with them on that. Now, folks, if you want to add Cardano ADA to your list of long-term crypto holdings, like I have, and you're in the USA, you can open a self-directed individual retirement account, or IRA, at iTrustCapital, one of the channel's sponsors, and trade crypto in a tax-advantaged manner. Of course, you should also be mindful of the risks of trading crypto in general, and especially in a retirement account, and talk to a professional first. But iTrustCapital allows you to double down on investments in crypto for a long time horizon in a traditional or Roth IRA, which you can contribute to for the 2021 tax year up until April 18th, 2022, if you are interested. So you can sign up using the link in the description and get a $100 Bitcoin sign-on bonus for funding your new account. Thank you very much for that. Now, if we shift focus now to pretty much the complete other side of the space from Cardano to Ethereum, as the network approaches the great merge to proof of stake, its creator, Vitalik Buterin, has dropped another juicy piece of research that he's been working on in relation to a new specification for some of the setup for sharding on the Ethereum network. Now, he released this new spec in the form of an Ethereum Improvement Proposal, or EIP. EIP 4844, which represented an FAQ, what he calls proto-danksharding. And for those who are unfamiliar, sharding effectively refers to a mechanism of splitting up a blockchain network into several mini networks or shards that can operate in parallel and thus distribute higher loads of transactions amongst each other for greater scale in general. Now, I read Vitalik's new EIP 4844 FAQ from end to end, and there was a lot of stuff there. But here's the major takeaway. Vitalik has refined the original vision for danksharding into his latest iteration that includes tangible work completed on the protocol components in the form of formalized transaction formats, verification rules, certain logic, etc., at least according to this document. In the future, Ethereum will be layer 2 centric, with rollups managing much of the load on the network. These rollups will require significant amounts of data to flow from the layer 2 to the main Ethereum network to be more or less consummated on the main blockchain. This proto-danksharding document talks a lot about the methodology for this process, namely the blob carrying transaction that will carry blobs or bundles of necessary data to facilitate this type of process, data that will not be read by the EVM, or the Ethereum virtual machine. The document also outlines the economics of this blob-carrying transaction and its effect on storage costs and burden for validators and node operators, as these large blobs of data need to be stored. And there's also discussion around the path to adoption of this spec. And that's where it gets interesting. The original danksharding concept could be launched soon, I quote, and then this new, more complex proto-danksharding spec that builds upon that and changes more things could come 6 months later, according to Vitalik in this write-up. So it's very interesting to see all this work coming out on the sharding concept, as I felt this was still years away. Maybe the timeline is shrinking on this one. We'll have to wait and see. Now, it is time for Rational Reactions, a segment on the show where I read headlines from tech and crypto-related publications and give you my instant rational reaction. So let me switch over to the computer, pull up these articles, and we can go ahead and get started. All right, we got the first story of the day here, and it is from Cointelegraph. Title reads this: Crypto investor Katie Haun raises $1.5 billion for Web3 venture fund. The largest ever venture fund for a solo female partner will invest in Web3 projects through two funds, a $500 million early stage fund and a $1 billion acceleration fund. This is pretty big, not only in the fact that it's a $1.5 billion fund, which is very significant. This is also, of course, a record in this space for Web3 projects. when it comes to a solo female partner, which I think is also significant. Now, the biggest thing that I want to point to here is that 1 billion is focused on acceleration rather than like a lot of these projects or a lot of these funds, that work on this stuff. They're very focused on early stage. There's a lot of returns to be had on early stage, and we get that. There's also a lot of risk, mind you. But I think that more money needs to be spent right now on accelerating and growing existing ecosystems because there's a lot of work that needs to be done. And especially in this space, there are oftentimes protocol developers who really aren't getting paid very well. So maybe there could be acceleration funds being allocated towards development of open source frameworks and tools. That's going to be an interesting area as well to see how much venture capitalists allocate funds towards things that are open source, because ultimately they would want, if they're getting shares, for example, and not just tokens, they might want IP. There's a lot of interesting dynamics in this space that still confound me a little bit around how investment is done in crypto. But ultimately, this is significant news. This is a huge fund. I'm looking forward to seeing how it's invested. Next story is from Cointelegraph again. Ethereum Classic up 75% in 8 days, but will ETH miners migrate after the Ethereum Classic fifthening? Ethereum Classic's price appears to be getting a boost from its scheduled fifthening next month. Now, here's the thing. Ethereum Classic is clearly getting a lot of attention because of the fact that Ethereum is moving to proof of stake rather imminently, which means that there will be a large number of displaced GPU miners, or graphical processing unit miners. And of course, people are speculating that they're going to look for another place to go, and so the obvious place would be Ethereum Classic. My thought, though, is that Ethereum Classic is not going to be the home for all these miners because there's a lot of changes coming to Ethereum Classic. It's not just going to be like, oh, well, it's the same as Ethereum now forever. I actually think there's going to be a lot of significant changes to Ethereum Classic that are going to render this type of speculation a little bit moot. 75% up in 8 days screams to me a speculative move. It screams to me people are thinking along those lines, like, oh, Ethereum's moving to proof of stake. What's the next best thing? Miners are going to go here. Price is going to go up. Let me get on the bandwagon. I don't think it's going to play out that way personally. But ultimately, I think the biggest thing is that Ethereum Classic also needs to make changes. And I think there's a lot of new people leading that project. And so I would expect Ethereum Classic to start going in a very interesting, different direction than maybe what everyone expects today. So I just want to point to that. Next story is from CoinDesk. Anchor Protocol will readjust interest rates each month. ANC falls by 5%. Rates will drop or increase 1.5% per month on the popular lending protocol until yield reserve starts to increase. Now, this is not surprising. Last week we talked about this a couple times. We talked about the sustainability of yield on the Anchor protocol and their savings accounts, allowing you to earn interest on your stable coins, and how there's had to be injections of resources into the treasury to support these yields. Clearly there's something broken. And so this here will readjust interest rates to accommodate and to sort of manage that treasury or that reserve a little bit better. Now, I think that people are worried about this because they're thinking, well, does this mean that there's a problem that we don't know about? Does this mean that yields are going to go down? That's where people are worried. And I totally understand that. But I think that there is need for something like this to actually stabilize things. And of course, it says rates can go up. So if the treasury is healthy, I would assume the reserve is healthy, these rates can start to go up. So it'll be another economic lever in an algorithmic balancing way that will make these decisions for the protocol. I actually think this is a really good move, and I think it will help in the confidence around the Anchor protocol, which is necessary. And the last story is from CoinDesk as well. EU's MiCA bill moves forward without Bitcoin limiting provision. The EU's landmark legislative package for governing crypto assets is moving on to the next stage of negotiations without the divisive provision seeking to restrict the use of proof-of-work crypto. Now, in the EU around this bill, there was a lot of debate because there was a statement or a piece of legislation in this crypto package that had defined a clause around proof of work. And it was basically limiting proof of work. It was casting aspersions, of course, on its overall environmental impact, but it had some negative consequences for cryptocurrencies like Bitcoin. Now, it's very unlikely that Bitcoin ever moves away from proof of work, so this is going to have to be something that lawmakers understand and maybe focus on renewable energy usage for Bitcoin mining rather than trying to just outright ban it. So we'll see what happens on this, but I'm glad to see that it's moving forward without this provision for now, because it was happening like that before. The provision was gone, and then it got added back somewhere, and then they were negotiating again. Now it's been removed again. So we're going to have to watch this very closely, because we've seen in the US, we've seen in other places, very bad pieces of legislation get tucked away. They get removed, and then everyone's like lets their guard down, and then it gets pushed back in at the last second. So you need to watch this and make sure that this does not come to fruition, because Europe jumping off the bandwagon maybe wouldn't be a complete death knell for Bitcoin and proof of work in terms of the usage of it around the world, but it would definitely hurt. And I think there would be a negative response in the markets as a result of something like that, whether or not it would tangibly have an effect on the Bitcoin network, which it likely wouldn't. Now, that's going to do it for the stories today. Let's move on to 404 Logic Not Found. Now, ladies and gentlemen, it is time for 404 Logic Not Found, and for those of you who are as of yet uninitiated in this little firecracker of a segment, I highlight notable tech-related fails or otherwise stupid moves in the world that need to get some attention. Speaking of attention, if you want to help this episode of Crypto Over Coffee get some attention from the algorithm droids, please hit that like button, get subscribed, follow the podcast, go all Obi-Wan Kenobi on them and tell them these are the droids that you are looking for and that you're enjoying the content. Others might also enjoy it. So thank you for that in advance. Now, the focus of today's 404 is the overused and misused words in the crypto space. And this word is second only in volume to the word scam in terms of misuse. And that is the word partnership. Yes, the word partnership is undoubtedly one of those words that has lost all meaning as a result of its frequent misappropriation by cryptocurrency purveyors and projects. Here's why. So many crypto projects have marketing teams that will do anything, and I mean anything, to get you to buy their token without thinking about the risks. One marketing ploy that has been rendered to great effect over the years for early stage projects in particular is to tout impressive partnerships with big brands, established crypto projects, VCs, or companies in an attempt to legitimize their project for investment. Here's a great example. Look at how many projects list Chainlink as a partner. How many of those do you think have a formal agreement with Chainlink's core foundation or open source community? Probably far less than they claim are partners, right? So let's be clear. Using Chainlink as a price feed in your dApp or building using their contracts doesn't mean a partnership. You're using open source code and public services. Another great one that I see is people claiming to have Microsoft, AWS, or Google on board as a partner. But when you look into it a little further, you see this partnership is just that the project software is published on that cloud provider's software marketplace. That's not a formal partnership or a statement that these companies support what you're doing. I mean, this is one of the oldest crypto marketing tricks in the book. And it didn't even originate in crypto, actually. If you think about it, this has happened in a lot of different areas before. How many times have you seen this huge list of impressive partners, but when you ask for tangible evidence of the nature of that partnership, there's no response from the team? For me, it's very often that I see this, that I experience this. And it is the clearest 404 logic not found. Flaunting hollow or misleading partnership listings is an instant reputation destroyer, first of all. And secondly, it's unnecessary. Just build something great first. If you have a great idea, then execute, because then making partnerships is a lot easier. And I frankly don't think you can even decide on who you need to partner with strategically until you have something built anyway. And who would partner with you if you haven't built anything? I mean, have you seen this as well? Have you noticed how often partnerships are being flaunted that are just nonsense? Please share some examples in the comments if so. Now, real quick before we dive into Q&A, I want to thank the sponsor of Crypto Over Coffee, Masterworks. I've always talked about taking profits in crypto, having a plan, and for me, a big part of my personal plan has been rolling crypto profits into other diversified long-term asset investments like wine and whiskey, real estate, fine art. That's been my plan. Now, Masterworks themselves provides access to the fine art markets by sourcing some of the world's most coveted art pieces from artists like Banksy and Monet, and it lets folks like you and me invest in these pieces for an accessible price per share. Masterworks platform lets you acquire shares in various pieces of art and allows you to sell those shares on a secondary market on their platform if you wish. So you have a lot of flexibility there. If you want to start investing in fine art yourself, you should check out the link in the description, give Masterworks a look, and support the channel. Thank you for doing that. All right, folks, let's do some Q&A from the community. I always answer questions from folks like yourself who watch or listen to the show. I've got some questions from last week's episode that I'm going to answer. Now, I want to remind you, if you have a question that you want answered, and any question goes, I try my best to answer them, leave them in the comments below on YouTube, or you can tweet me at Hashoshi4 as well if you're not on the YouTube show. All right. So let's dive into these questions. I'll pull them up on the computer here and we can get started. I think I only have a couple questions today because we had a lot of content earlier on in the show. I want to keep this show nice and concise. Trying my best to make this show more concise per your feedback. Okay, first question of the day is from Justin D. I know you're a Cosmos and JUNO supporter, and I would love to hear your take on the JUNO network proposal 16 and 17. Seems like it's definitely dividing the whole community and validators. So let me give you a little bit of context here. Cosmos, interoperability ecosystem, you know that. JUNO is a smart contract sort of platform, dApp ecosystem, general project built on the Cosmos ecosystem interoperability network, right? So JUNO is its own sovereign blockchain that connects to other blockchains through the Cosmos interoperability protocols, IBC. Just in case you wanted to know. Now, here's what happened. In the JUNO space, there was basically an airdrop. The community was all about this airdrop. It came to light that a whale very likely gamed the system and took up a huge collection of these tokens. Now, the first we heard is there would be a path to revoking tokens from that whale who gamed the system, right? People were saying this isn't a fair airdrop. We need to fix this. So there were now these governance proposals put out there. I think proposal 16 was the one that kind of asked the community what to do, right? What should we do? People vote yes or no on propositions. People were basically trying to determine, do we revoke tokens from this whale? Do we kind of start over here, or do we move forward and just let this be? Very similar to what the DAO hack governance was back in the day for Ethereum, but this was maybe a little more formalized. Now, Proposal 17 is where things started to get a little itchy, because in Proposal 17, now it's almost like a request for public comment, and it seems like all of the yes votes and the actual what should have passed and been implemented in Proposal 16 is the team's kind of walking back now. And I'm not entirely sure of all the details, so I don't want to say, hey, this person's wrong, or this person's wrong, or this team is wrong. But I think what this shows is that now with Proposal 17, it's kind of asking now, do you think that the outcome was fair in a sense, right? That's not the exact language, but basically it's a yes or no answer. It seems like information gathering rather than an operative action that's going to be taken as a result. Although 16, there seemed to be more of an action. But it just shows that governance by vote doesn't really mean anything unless it's actually implemented. So there's a lot of people now that are divided. What do we do now? Now there's a debate around governance. Is this governance even legit? Because what we voted on seems to not be implemented yet. It doesn't seem to be, because there's another proposal now out that's kind of about the same thing that doesn't seem to have an action attached to it. So now this becomes a really, really problematic thing to deal with, because on one hand, you have this idea of a centralized entity potentially moving forward with revoking tokens from a whale because they didn't follow the rules. And on the other side, you have the fact that a lot of people feel badly done to, and a whale would get away with this. So there's not a clear answer, and governance is not going to just be the unilateral answer, because voting is only one thing. Executing on that vote and following through on those the referendum or what you decide is another. So that's my thought. This brings to light that governance still needs work in this space, and that even projects that have done really well traditionally, they need work, right? They need work in this space to figure out all these little details that really do matter. So thank you for your question. second question and final question of the day is from Morris Epstein. No relation. That's clever. Here's the question. I'm playing it safe at the moment. I've rebalanced my portfolio. Currently, I'm only 85% in on ApeCoin. How would you recommend I go about moving the other 15% across? Is it worth keeping 1% USDT or Tether in case it dips? But it's not going to dip, so it probably isn't worth it. Now, here's the thing. I don't mean, Morris, to call you out. There's no way, shape, or form that that's my intent. If you're rebalancing your portfolio, it's my opinion, and based on my strategies, the way that I work in this space, I would never go 85% in on something. If I'm in 85%, I am way too exposed to an unpredictable event, which happens all the time in crypto, where there's like a huge exploit, or there's new revelations around the team that backs that cryptocurrency's development, right? I don't ever want to be 85% in. So if you wanted to ask me for friendly and non-professional advice, I'm never giving financial advice in this channel. I would say you want to spread that across a few other cryptocurrencies, or move into stable coins in a larger degree and earn yield on those passively in a DeFi protocol. Like, there's risk in those DeFi protocols and earning yield in a savings account, no doubt. But I think if you're thinking you kind of want to be rolling out of the markets, you're not loving what's going on around different cryptocurrencies, I would feel a lot safer in earning yield on stable coins than I would being 85% in one cryptocurrency. You know, ApeCoin's hyped, we get that, but I don't know that I would be doing that personally. That's just my opinion. I would say you want to be diversifying across different cryptocurrencies with at least 50% of what remains. Maybe you go 15% stable coins earning yield, and then maybe you go on the rest of that, 30% or whatever it is that you want to allocate to other cryptocurrencies that you like, other altcoins. And then you can say, maybe you put 5% in like these huge moonshots, and then the remaining 50%, if you want to take a big risk on ApeCoin, you can do that, right? That's just my 2 cents. So yeah, thanks for your question. Hopefully that makes sense and you're not too offended. Okay, here's what we're going to do, folks. We're going to wrap up the show today, but I want you to leave me a comment in the description, or sorry, in the comments section below, or you can tweet me if you're on the podcast. I want you to tell me what content you want to see. What do you want to see videos on? What type of videos do you want to see? Want to get those in production? I've got a few comments from last week's video about what you want to see, taking those in mind. So please let me know in the comments what you want to see. I'll be working on these videos for you here in short order. Most of all, I want to thank you for watching or listening to Crypto Over Coffee. I hope you and your family have a wonderful weekend and week ahead. And until next time, cheers.